Here are the crypto top headlines covered in this video. U.S. SEC and financial firms now discussing key technical details of spot Bitcoin ETF applications, says report. Next, U.S. government removes 2 crypto AML rules from National Defense Bill. Also, Tether announces wallet freezing policy for OFAC-Sanctioned persons. Plus, institutions ignoring altcoins betting on Bitcoin, says Bybit research. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. We are a new channel here on YouTube, and would greatly appreciate it if you would click on the like and subscribe buttons, as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, U.S. SEC and financial firms now discussing key technical details of spot Bitcoin ETF applications, says report. The U.S. Securities and Exchange Commission is reportedly discussing crucial technical details with financial firms that applied for spot market Bitcoin exchange-traded funds. According to a new report by Reuters, industry executives say that the deliberation between the regulatory agency and those who placed bids for BTC ETFs is a sign that the SEC will soon approve the products. Anonymous sources familiar with the matter told Reuters that the topics of discussion include custody arrangement, creation and redemption mechanisms, and investor risk disclosures. A spot market BTC ETF would give traders exposure to the crypto king via traditional finance and stock exchange platforms. However, the SEC for a while rejected bids to create such products, citing consumer safety. In August, a federal judge ruled against the regulatory body, saying that it must reconsider its rejection of crypto asset manager Grayscale's bid to create a spot market BTC ETF as a means of avoiding arbitrariness and inconsistency. Previously, the SEC had approved futures BTC ETFs, but the judge said they failed to adequately explain why futures ETFs were greenlit while spot market ones were denied. Marquee financial firms that have applied to create spot market BTC ETFs also include Cathie Wood's ARK Invest, the world's largest asset manager, BlackRock, and mutual fund manager Van Eck. Our next top headline, U.S. government removes 2 crypto AML rules from National Defense Bill. The 2 provisions abolished from the National Defense Authorization Act centered around anti-money laundering issues linked to cryptocurrency. The United States government has eliminated 2 provisions from the National Defense Authorization Act, or NDAA, that were designed to address anti-money laundering concerns involving cryptocurrency. The NDAA is a legislation that authorizes how the country's Defense Department can use federal funding. Among the extensive list of provisions removed from the NDAA, 2 specifically outlined a thorough review system and reporting of crypto activities to combat illicit practices. The first provision mandated the U.S. Secretary of the Treasury to coordinate with banking and government regulators in setting up a risk-focused examination and review system on crypto for financial institutions. The second provision addressed combating anonymous crypto asset transactions, particularly involving crypto mixers and tumblers. This involved producing a report detailing the volumes of crypto asset transactions linked to sanctioned entities. Furthermore, the report would cover the regulatory approaches adopted by other jurisdictions. Following that, guidance would be given on the implementation of crypto regulations to the U.S. government. recommendations for legislation or regulation relating to the technologies and services described in paragraphs 1 and 3. On July 28th, Cointelegraph reported that the United States Senate passed the NDAA worth $886 billion. The crypto-related amendments included elements from the Digital Asset Anti-Money Laundering Act, introduced in 2022, and the Responsible Financial Innovation Act, which seeks to set up precautions to avoid another FTX-style incident in the industry. This was proposed by a team of senators, including Cynthia Lummis, Elizabeth Warren, Kirsten Gillibrand, and Roger Marshall. In recent times, the U.S. government has been deliberating on issues related to money laundering and terrorist funding facilitated through the use of crypto. The Financial Services Committee of the U.S. House of Representatives held a meeting on November 15th to discuss illegal activities within the crypto ecosystem. During the meeting, there was also a review of how proactive crypto exchanges and decentralized finance providers are to prevent money laundering and terrorist financing. Our next top headline: Tether announces wallet freezing policy for OFAC-Sanctioned persons. Tether is expanding control sanctions to the secondary market in an effort to cooperate with regulators in the United States. Stablecoin issuer Tether has announced another step toward cooperation with law enforcement and regulatory agencies by initiating a voluntary wallet freezing policy, according to a blog post on December 9th. Since December 1st, Tether has been offering secondary market controls to freeze activity connected with sanctioned persons on the United States Office of Foreign Assets Control, or OFAC, Specially Designed Nationals, or SDN, list. Companies and individuals controlled or owned by sanctioned countries are included on the list. According to Tether, the policy will supplement existing security protocols and is a proactive effort to work even more closely with global regulators and law enforcement agencies. The U.S. Department of the Treasury has been using the list to curb crypto transactions potentially connected to illegal activities, including funding terrorism and unauthorized fentanyl distribution. Wallets previously added to the SDN list have already been frozen by Tether in a move that contradicts the company's previous positions on the matter. In August 2022, for example, Tether announced it wouldn't proactively freeze sanctioned Tornado Cash addresses unless instructed by law enforcement. According to the OFAC, individuals and criminal organizations have used Tornado Cash to launder over $7 billion in cryptocurrency since 2019. By executing voluntary wallet address freezing of new additions to the SDN list and freezing previously added addresses, we will be able to further strengthen the positive usage of stablecoin technology and promote a safer stablecoin ecosystem for all users, said Paolo Ardino, CEO of Tether. The company based in Hong Kong is behind the stablecoin Tether, whose market capitalization reached all-time highs during the crackdown on crypto firms in the U.S. over the past months. Currently, its market capitalization is at $90 billion, indicating a strong demand for stablecoin that holds nearly 70% of the market. Our next top headline: Institutions ignoring altcoins, betting on Bitcoin, says Bybit Research. Institutional investors show little interest in Ether and altcoins. Bybit Research data reveals 50% of their portfolio is allocated to Bitcoin. According to research by Bybit, institutional traders have expressed a significant bullish sentiment towards Bitcoin, mixed sentiments regarding Ether, and a general air of skepticism towards altcoins. From December 2022 to September 2023, The study provides an insightful look into trading behaviors and asset allocation amidst significant market fluctuations. Institutional traders favor BTC, moving away from alts. The study reveals a significant shift in the institutional traders' approach to major cryptocurrencies. Bitcoin holdings among this group saw a substantial increase, doubling in the first 3 quarters of 2023. September marked a turning point, with half of institutional traders' portfolios allocated to Bitcoin. This aligns with the positive market sentiment towards the primary crypto, fueled by expectations of regulatory advancements and the potential approval of a Bitcoin ETF. In contrast, Ether's appeal has reduced post-Shapella in April, with a decreased holding percentage across most traders. However, a surprising surge in Ether holdings by institutional traders was noted in September, suggesting a broader upbeat sentiment towards cryptocurrencies. Stablecoins presented a different picture. Retail traders consistently preferred them, particularly in uncertain market conditions. On the other hand, institutional traders displayed a strategic shift, reducing stablecoin holdings in bear markets, possibly indicating adept market timing. This contrast became more apparent in September as institutional traders significantly reduced their stablecoin holdings, coinciding with an increase in Bitcoin and Ether investments. Altcoins, however, did not find favor with institutional traders. The interest in these alternative tokens has been consistently low, with a brief spike observed in May 2023. This trend indicates a clear preference among institutional traders for more established cryptocurrencies. UTA's role in enhancing market adaptability. Bybit's research states that the United Trading Account, or UTA, offers a solution for navigating market volatility, allowing flexible leverage adjustments according to market conditions. The research highlights the effectiveness of UTA in managing asset allocation amidst fluctuating markets, potentially preventing unnecessary liquidations during high volatility periods. The Bybit study focused on active users, specifically those who conducted more than 20 monthly trades. It analyzed critical periods in bullish January, March, April, and June 2023, and bearish markets December 2022, May, and August 2023. The research explored the trading behavior of users across different asset classes, meticulously examining institutional traders, or INS, VIP traders with assets exceeding $50,000, and retail traders. So this concludes our top headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons, as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.